Welcome everyone, this is Martin right over here, and welcome back to another weekly video. We're going to be looking at winning trade ideas for this coming week, October 8th to the 12th. And last week, if you were following my weekly videos, there was an opportunity to make 400 pips or more. That's what my weekly winning trades gave you. And also, I want to, before I start, I want to welcome all new subscribers from around the world to my weekly videos, and also to all those people who have recently enrolled in my new course, Forex Success in 5 Weeks. If you want some free information, I have a free ebook. It's 33 pages. Contact me. Again, my name is Martin. MSKYJ007 at gmail.com. Okay, now we're going to move to the disclaimer. You can view this risk disclaimer. The important thing is that I produce all my weekly videos for educational purposes only, even though I present some pretty good darn trading levels. Some people call them signals. I want you to view my videos at your own risk, and especially if you're using real money on your live account, make sure you trade with no more than 1 to 2% of your account balance. So in other words, you don't want to lose more than 1 to 2%. Okay? Okay, everybody, I want you to pay attention to my charts, and I mark them up a lot differently than many other educators out there. I try to make them easy for you to understand, and first of all, you'll notice that I'm using color charts. I have pink color below blue here, green above blue. When you see green above blue, that means we're in a uptrend and you're looking for buying opportunities. Very simply, when you have pink below blue, you are in a downtrend and you're looking for selling opportunities. And when you have no colors, as in right here, take a look at this area, okay? That is called a color squeeze or a momentum squeeze. In other words, there is no momentum to the upside. Here's momentum to the upside. Here's momentum to the downside, so there's no momentum up or down. In other words, price is basically going sideways, and you have to wait for either a breakout to the upside or to the downside for you to place a trade. Okay, so that's pretty easy. Colors mean up or down. No colors mean sideways markets. Okay, now the next thing is, take a look. This is the Euro USD daily chart, and let me just take that off. I've got two lines on here. This is the blue line. Everything to the right, see this blue arrow? Everything to the right happened last week, okay? And I've got a blue dash horizontal line. This was my trade opportunity I posted last week, and I said sell below, or I suggested sell below 115.17. Take a look at the price right over here. So getting in here, you would have made from here to down here, and that was good for 44 pips last week. Okay, getting in here, here. Your stop, aggressive stop, would have been just above the speed line right there. Aggressive stop there. So and the reason that I would have closed the trade after this big candle here is because, one, we do have a very large candle move or a price move. So normally I would close, if I make some pretty good pips, I close the trade after 1 day, okay? And I'm not looking like right now as at 1 to 2 or 1 to 3 risk reward to risk, okay? So the aggressive trader, however, would keep maybe half the trade open, hoping that trade would come down further, okay, or the price would come down further. Also, another reason for closing it right there, take a look to the left. We have a huge momentum candle to the upside. See this white candle here? That is support right there, and price did come down, and now it's come back and bounced off the previous support. Okay, so I look at previous big candle moves. This was a big candle to the upside. So this is a momentum candle to the upside. Okay, so for this week, we're looking at buys above 116.22 and sells below 114.94. Okay, let me take that off. We're going to move right along. Next is British Pound USD. Okay, you can see last week here to the right of this blue line, okay, that's last week right here, price moved down and bounced. It actually broke a trend line and bounced higher. Last week I had this level right here. Take a look at this horizontal blue line, 129.88. And why was that significant? Because I suggested look for sells below 129.88. Okay, and right there, getting in right there, my stop, aggressive stop, just above the speed line. You see this line right here. There's my aggressive stop, and price did come down to here. Okay, so didn't come down really that far, but still good last week. Good for 44 pips. I want you to understand this, guys. Now, the conservative trader takes the trade off the table, happy with 44 pips. The aggressive trader would take half off the table, half the trade off the table, keep the other half open right here. You see the other half. The next day, on the Thursday, we have a white candle. It bounced higher, and since this kind of, you know, eclipsed the previous black candle, even though it didn't go didn't close above the speed line, I would have closed my trade right here, or the half the trade that was still open, with a bit of a, you know, again, not making any more profits. And of course, the next day it went right up. So again, you have to decide, are you an aggressive trader or a conservative trader? And then you trade according to your trading style. Okay, so let's take that off and let's get to the next one. Audi USD. Here you go. Last week, you can see to the right side of this blue line, I suggested a sell, and I had this posted on last week's video. By the way, if you don't really understand what I'm saying, go back to last week's video and you would see my posted levels. So for the sell side, on the sell side, I had this posted. I suggested look for sells below 0.7176 right there, okay? And you can see price did go down to this support area. I already had this drawn in for you. This rectangle, this is support. Take a look right here, okay? And I would have taken my trade off the table. So this was a winning trade, taking off the table for two reasons. One, we had a big move down for 74 pips. Let me just circle that for you. So last week, that was a 74 pip move. And we also tested previous support. So that's another good reason for getting out. Holding on to the trade, the aggressive trader might have kept would have taken half the position off the table for profit, kept half open, and you would have made an extra, how many? Let's use my crosshair tool for those people that are using the MT4 platform, which this is, okay? So extra about 59, 60 pips. So this was a really good mover last week, okay? Now, gold, you can see I already had this rectangle drawn in. Take a look at my last week's video, guys, okay? That's why it's important to become a subscriber. I want each and every one of you, if you're watching this video, make sure you subscribe. Click on the subscribe link to get these videos automatically, okay? Otherwise, you may forget at the end of the video. But anyways, click on the subscribe. You're going to get each and every video, and I always post my winning trades, some great trade ideas for you, okay? It's also a terrific way for you to learn Forex just by watching my weekly videos. Now, take a look here. You can see I already had drawn in this. What does this mean? Okay, this means that price has not gotten broken this area or broken the support here. Basically, price is just sideways, okay? We're moving in a sideways market, so it's a sideways range. Do not, I don't have any trade suggestions except wait for a breakout to the upside or wait for a breakout to the downside for this range. I have a feeling that price will be breaking out to the upside at some point soon. Okay, so that is gold, and now we move on to New Zealand USD. You can see here what happened last week to the right side of this blue vertical line. Okay, last week was good for 79 pips. Okay, so far every pair, every currency pair I'm showing you is posting a profit. Some pretty good profits, okay? And here you can see my level here was from last week's video, 65.89 right there, okay? So price right there, getting in there. I would have gotten out right there. Why? Because two reasons again. One, this was a huge move. After a huge move down, I normally would get out of a trade. Also, take a look. It hit previous support right here. So from here, you could expect price to either go down further or bounce higher again, bounce off a previous support, and that's how price works, right? Price goes down, up, down, up, down, up, down. And in this case, I've drawn in this line already for you. So from here, price could certainly go up higher and then back down again, okay? But for this week, looking for sells below 0.6427 and buys above 0.6612. So last week, this moved 79 pips in your favor. That could have been a really good money maker for you. Okay, let's take a look. Take that off. Now, US CAD. Okay, US CAD. Now, I'm going to show you, I had this level posted in last week's video. It was suggested sell below 128.47. Take a look right there. And even though price on the, this was the first trading day after the blue line. So the blue line represents the previous Friday. This is the first trading day of the week. So this is the culmination of Sunday and Monday's trading. Here's Tuesday, Wednesday, Thursday, and Friday. So we have 1, 2, 3, 4, 5 candles, or five price bars for each week. Okay, each trading week has 5 price bars with this broker I'm using. If you're interested in the broker I'm using, send me an email and I'll be more than happy to give you the name of the broker. But here, I did not do a sell trade. Take a look here. I posted there are no trade last week, and why? Because price opened right there on the Sunday, Monday with a huge gap. You see this gap right here? Okay, that's a gap. Okay, and when there's a gap, most often price comes back again, but you just never know where price is going to go. So because of the gap, I waited at the end of Sunday and Monday. Price closed there. Yes, you could have taken, possibly, you could have placed a trade here, but I want to make sure the next day price went up and went up again. So there were really no trade opportunities last week. Okay, so that's my rationale for that. Always wait for a candle to close, okay, before you decide to do anything. Now, let's go to oil. Oil has gone up quite a bit since beginning of September. You can see that right here. Here's beginning of September price. Oil has really gone up. And I had this drawn in previously on a previous video. You can always go back and check, but this is resistance, guys, okay, or target level. Often I post, I put in a rectangle to show you a target level. And last week, price, this was last week, price went from here. Let me just take that off. So price went from here all the way up to hit the target level or end resistance and bounce back down again. Okay, so just want you to understand that right now price could still certainly go higher, but watch for this level right here. You might want to take a sell if price comes down a little bit further. Okay, so That's oil. Let's take that off. And the U.S. Swiss franc. Now, this was a really good money maker last week. Right away, you can tell. Take a look. 94 pips last week. This price moved up 94 pips. Now, where would I get in, or where did I get in? Well, I had this blue, see this blue horizontal line? I had this level 0.9825 posted in last week's video, and I suggested buy above this level. And guess what? On the Sunday Monday trading, and I normally do not trade on a Sunday Monday, so I watched this candle close higher, okay, right there, okay, and you could have placed a buy trade again at that level, right, if you want it, or above the wick of this candle right there. Anyways, you would have made all these pips here, good for 94 pips. Your stop loss getting in here. The okay, again, if you're an aggressive trader, in this case, take a look. You see this blue dash line? That's the 89 moving average, okay? So that's a pretty good support, a dynamic support level. It moves with price, and my aggressive stop would have been right about there, okay, below this below this white candle and below the this dash blue line. I teach you these things in the course, by the way. So if you want more information on my course called Forex Success in 5 weeks, then please send me an email and use your first name, so I'm not calling you hey you or whatever, you know. Give me your first name, I'll send you a free 33-page ebook. Okay, so back to here, getting in here, my aggressive stop, my the conservative stop would have been below the speed line and this candle right there, so would have been about there. So that would have been a much bigger risk stop loss there. But anyways, price went up. It was a big move up there. Got out immediately. You would have made 94 pips. Okay, and so for this week, it's sells below right here. Sells below 98.87. This is a sell. Okay, I always post 2 levels. The lower level is the sell level. The higher level right here is the buy level. So you could look at buys above 0.9957, or an aggressive, when you see an A, that means an aggressive sell below 0.9887. Why? Because often I look at price to come back down to hit the speed line area or this area right here. So there isn't, if you do take a sell opportunity here, and if price moves down, I would take profits off the table, just because the move to the downside is limited. Also, remember, we've got this. Let me just take that off. We've got the blue dash line. So that's, see this blue dash line right there? So that's acting as dynamic support as well as this speed line right here. Okay, so that's what I see for the U.S. Swiss franc. Now we move on to U.S. Japanese yen. Okay, take a look. Same thing. Price moved up, hit, and I had this drawn in already on the charts for your convenience. So here's my target. So price went up with this big white candle right there. That was good. Last week's move, and take a look, my entry, see this blue horizontal line? I had an entry, or, well, not an entry, but I was looking for buys above 113.74. That was good for 82 pips, guys, okay? So it's pretty easy. And I may be repeating myself, but you know what? The more I repeat myself, and I'm trying to share my thoughts with you as far as how to understand my weekly charts, then hopefully you're going to follow with me and have a little bit more confidence in getting in. It's also important to understand where you put your stop losses. So if I suggest an entry here, right here, and by the way, Sunday, Monday, price did actually go higher. So if you're waiting, could have gotten in there. You would have made a little bit less than 82 pips, but still big move on the Wednesday's candle. This is Wednesday, Thursday, Friday here. So Wednesday, big move up. I would have gotten out just for the fact that we had hit the target and resistance area Okay, so that was good for some pretty good pips. My stop getting in here, my stop would have been just below the speed line right there. That's the aggressive stop. The swing low right here is for the conservative trader. That's where your stop loss would have been. Okay, so for this week, look for buys above 114.50. Again, that's an aggressive buy above 114.15. Why? Because again, if price goes higher, you're limited to this area right here, and then you would have to wait for a breakout. So if price goes up again and breaks this high right here, this previous high here, I would take half the trade off, keep half the trade open, and hopefully price would go higher to make more profits. Okay, so to the upside above 114.15, to the downside right here, okay, 113.45. Okay, so let's move right along. Hopefully you're enjoying this video, everybody. Okay, I enjoy making them, but it's hard teaching people because you know, everyone has a different trading style. We're all humans. We all work on human emotions, and it is difficult to trade because you're either a conservative trader or an aggressive trader, and everyone has their own thoughts and ideas on how to make money. Okay, so take a look. Euro, British pound. This was good for only 20 pips. Take a look right here last week. And why do I say that? Well, I had this level posted. Take a look at this blue horizontal line. Take a look to the right side, 0.8860. That was my level posted. I said sell below 0.8860, and yes, you could have gotten in there. It did go down on this candle, Thursday's candle. This black candle went down and hit what? What is this red dash line? Okay, what does this red dash line signify? Well, that is probably one of the most important moving averages. This is the 200 simple moving average. Okay, so often price hits the 200 and then bounces again off the 200. In this case, not only did it hit the 200, but it went right through. So you can see the euro last week was a very weak currency. In this case, from here, getting in here at my posted level, price only moved about 20 pips, and that's why I say last week was good for 20 pips. The conservative trader would have taken their trade off the table with a profit. Mind you, only 20 pips, right? Only, but better than nothing. However, the aggressive trader would have perhaps taken half their trade off the table, let the other half run, and guess what? This time it went down in a big way, and let me just take that off, and I'll use my crosshair tool, and so that was good for another 50 pips or so. Okay, this week, look for sells below 0.8772 and buys above 88.56. Okay, that's for this week. I've got this target level right here, so if price keeps going down, make note of this target level, and if you want to see what the price that is, just go to your right hand side. Okay, now we move to another cross pair, Euro Japanese Yen, and this one, this really didn't move at all. Take a look. Last week here, I did suggest a sell, okay, right here. So last week to the right side of this blue line, okay, and there was my level right there. Take a look on the right side, 130.87, okay. So I suggest a sell below that, and take a look at this candle on Sunday money. Now, Sunday money's trading, I wouldn't have gotten in, okay? So I normally do not trade the Sunday money. I just watch the candle, and you see, sellers brought it down, buyers brought it back up, even though it ended up being a bearish black candle. Now I'm waiting for the next day, which is the Tuesday trading. By the way, I'm broadcasting this video. I live here in Toronto, Canada, one of the best countries in the world. So I'm talking about Eastern Standard Time. We're the same time zone as New York City. Okay, so that's so when I talk about times and dates and that, talking about Eastern Standard Time Zone. Okay, so now here, the next day, always wait till candle closes. It went up slightly, but here, it did not close above the speed line. You see this white candle? The next day, on the Thursday, it went down. I would have posted then a, after this, I would have had a pending sell stop, again, based on my level at 130.87. And the next day, it kind of went up again and closed with just a small loss, 11 pips. Now, at the end of the week, I normally close my trades. So at the end of the week, I don't leave the trades open. That's probably the best thing, because on Mondays, you can often have gaps, gap ups, gap downs. We don't know what happens on the Sunday, like after the markets open on Sunday evening, Eastern Standard Time. So normally close it on a Friday. Okay, so just a small loss, 11 pips. Let me take that off. And now we get to Euro Audi. And this one, this is interesting. I want you to pay attention. There's two trades here. Last week, everything to the right side of this blue line. Take a look, okay? So, I had this level posted, 160.45. And on the Sunday, Sunday, Monday, there was a black candle. I would have had a sell position right there, and on the next day it went up. I did not close the trade, would not close the trade. However, my stop loss, if I'm getting in here, my stop loss, aggressive stop, is just above the speed line. There it is, right? And this candle stopped me out for a 88 pip loss, okay? However, I also had this level posted last week, buys above 162.55, and guess what? After this big momentum candle, that's what I want to see. I want to see a big momentum candle, okay? And I had this level posted, so right here you would have, you could have gotten in and you would have made 75 pips. So the first trade, sell trade, loss of 88. The next buy trade, 75. So you would have lost a 13 pips, right? 13 pips. Okay, so nothing really to worry about. And I believe price is going to go higher for this week. Look for buys above 163.64. Look for sells above below 161.30. Sells below 161.30. Okay. Now, my course, I also teach you this. See this candle right here? That we had a bounce higher. This is a breakout above the 8. This is a signal in my course for success in 5 weeks. I actually, and because I'm posting this video only once a week, I couldn't let you know about this, or I couldn't alert you, but you would have gotten in there and you would have made all these pips up here, okay? That's based on the information I teach you in my course. Okay, now let's move on. We're almost finished, guys. I know it's a bit of a long video, but this is the last one. The British pound, Japanese yen. Let's take a look. Last week here, we had a buy above 148.56, and guess what? Again, this was, well, we had actually two buys here. Take a look. After Sunday and Monday, let me just, okay, just a second. So, after the Sunday, Monday, price went up, but notice we had a huge wick. So buyers tried to bring it up, sellers brought it down, but still I would have had a buy position there. And then here I would have had a aggressive stop loss right below my speed line. So I would have been stopped out with a loss. So this first buy trade would have been stopped out with a loss of 58 pips. However, price, you see this next candle after this big black candle. Let me take that off. Clean this chart up for you just a bit here. Okay, big black candle down. Next candle though went up and closed above the speed line. Okay. And we're sitting right at the red dash line, so that's the 200. So have to watch and see what happens. And guess what? Again, you could have had a buy stop pending buy stop order above 148.56, the same signal I gave you last week. And again, for this time, you would have made 49 pips. So first, you would have lost 58 pips. You would have then on the second buy right here, getting in with a pending buy stop, you would have made 49 pips. So in total, you would have lost 9 pips. So not a big loser at all. When you add all the winners, we had mostly winners, a few small losses, okay, because of good money management, you would have still made over 400 pips. Hopefully you enjoyed this video. And if you're interested, make sure you subscribe to my weekly videos. Click on the subscribe and like buttons, okay, on the YouTube channel. And for your free, there you go, free 33-page ebook, email me. My name is Martin at mskyj007@gmail.com. Hey, have some good trading days ahead of you. Take care, trade safely, and we'll talk to you again soon. Bye for now.